So always remember, outstanding expense is a liability, then its reverse will be asset, outstanding income. What is bad debt? Bad debt is a liability, so we have to take this in revaluation account as well as in the balance sheet. If any assets value have increased and liability value have decreased, you are going to record in the credit side. So anything which is deducted from debtors is liability, so bad debts is a liability. Hello everyone, I am Arshita, lecturer, Department of Commerce, Vidhyaashram PU College, the Temple of Excellence, Mysuru. My dear students, today we are in the fourth session of chapter 4, that is retirement of a partner, and this is from part A. So my dear students, we have already discussed what is this retirement of a partner, then how to calculate gain ratio as well as new profit sharing ratio under retirement of a partner. Also we have solved a 12 marks important problem on retirement of a partner. In today's session, we shall continue with one more problem, that is 12 marks problem. Now go through this problem here. Rohan, Mohan and Kiran. Now, these are three partners here. So, who are the partners? Rohan, Mohan and Kiran were partners in a firm sharing profits in the ratio 2:2:1. So, what is their profit sharing ratio? 2:2:1. So, this can be written in the form of fraction, and this is of Rohan and this is of Mohan and this is of Kiran. Now, how to write this in the form of fraction? That is, Rohan 2 plus 2 plus 1, 2 by 5, and Mohan 2 by 5 and Kiran 1 by 5. So this is their profit sharing ratio. Their balance sheet as on 31st March 2018 was as follows. That is, they have given the balance sheet before the retirement of a partner. Now go through the balance sheet here. So they have given certain liabilities, they have given certain assets. So in the liabilities, we have creditors 42,000, bills payable 7,600, reserves 18,400, and they have given capital of all the partner, that is Rohan, Mohan as well as Kiran. So Rohan's capital is 70,000, Mohan's capital is 60,000 and Kiran's capital is 50,000. Now coming to the asset side, we have certain assets here. Cash they have given 6,000, debtors 12,000, stock 40,000, building 1,50,000, furniture 20,000 and patents 20,000. So the total of both assets and liability is 2,48,000. And remember, this is a balance sheet before the retirement of a partner. Let us see now who have retired from the partnership firm. Kiran retired on March 31st, 2018. Now, who are the partners? Rohan, Mohan and Kiran, where Kiran retired from the partnership firm on the following terms. Let us see what are the terms and conditions here. Goodwill of the firm is valued at rupees 60,000. Now they have given valued goodwill. So in a previous problem also, we had a problem where they have given the valued goodwill. So what we have to do? First we have to take retiring partner share of goodwill, and that amount has to be distributed among the remaining partner in which ratio? In gain ratio. Here also they have given the total valued goodwill. First we have to take the retiring partner share of goodwill, that is Kiran's share of goodwill. Next, that amount has to be distributed among the remaining partner, that is Rohan and Mohan, in which ratio? In gain ratio. Next, second adjustment, bad debts amounting to rupees 2,000 were to be written off. So, what do you mean by bad debts here? Bad debts is a liability. They have told that bad debts amounting to rupees 2,000 were to be written off. Now, if you see the balance sheet here, they have given just debtors. They have not deducted the bad debts, but now they are telling that bad debts has to be written off. So, what is bad debt? Bad debt is a liability. So, we have to take this in revaluation account as well as in the balance sheet. So this is this is where this adjustment has to be recorded, once in revaluation account and once in balance sheet. Next, patents is to be considered as valueless. So what do you mean by valueless? Here its value is going to become 0. So what the patents they have given here? Patent is 20,000. Now they are telling that is before the retirement of a partner, patent was rupees 20,000. But now what they are telling? It is becoming valueless. In the sense, patent is what? Patent is an asset. So decrease in the value of asset. So where do we record? We will record in revaluation account once. We will record in the balance sheet. Next, value of building is to be reduced to rupees 1,30,000. Now remember here, they are telling that it has reduced to 1,30,000. Let us see what is the actual value of building in the balance sheet. That is 1,50,000. So earlier it was 1,50,000. Now they are telling that it has been reduced to rupees 1,30,000. In the sense, the current value of building is 1,30,000. So to what extent it has decreased? It has decreased by rupees 20,000. So this 20,000 has to be taken in revaluation account, and once it has to be shown in the balance sheet. Next, prepaid expenses rupees 500. Now what is prepaid expenses? Whether it is asset or liability, I had already given a tips here. So how to recognize prepaid expenses or prepaid income? Now, so this is liability in the balance sheet and this is asset. Now, how to recognize whether it is an asset or liability? So, always remember, outstanding expense is a liability, then its reverse will be asset, outstanding income. Next, here, reverse of expense is what? Income. So, it's nothing but prepaid income. So, prepaid income is liability, then prepaid expense is asset. So here, what they have given? They have given about prepaid expenses rupees 500. So prepaid expense is what? It's a asset. But in the balance sheet, they have not given prepaid expenses. Now they are telling that prepaid expenses is rupees 500. It means what? Increase in asset. So where do we record? Once in revaluation account and once it has to be recorded in the balance sheet. So next adjustment is value of furniture is increased by. Now this whole 60,000 has to be taken in revaluation account. Why? Because they have told it has been increased by. In the sense, the value of furniture has been increased by. To what extent it has been increased? It has increased by rupees 60,000. So we have to take whole 60,000 in revaluation account and once it has to be shown in the balance sheet. So these are the certain adjustment. So we have to take or make sure that each and every adjustment should come twice in your solution. So we have already discussed. So value of the goodwill. So goodwill valued. So we are going to record in partners capital account. So we know the entry. So what is the entry for valuing goodwill during the retirement of a partner? Your entry will be remaining partners capital account data to retiring partner capital account. So we shall see later how we are going to record that goodwill. So time being, you remember, so we have to record increase or decrease in the value of assets and liabilities in revaluation account. Later, we will prepare partners capital account and at the end, we will prepare the balance sheet. Now, they have asked us to prepare revaluation account, partners capital account and balance sheet, that is after the retirement of a partner. Now go through the revaluation account. So we know the format. So revaluation account remains same that of admission of a partner. Only changes is that your revaluation profit or revaluation loss will be transferred to all the partners under retirement, whereas in admission it will be transferred only to the old partners. So here you have to transfer to all the partners in their old profit sharing ratio. Now what is the format of revaluation account? So you'll be having debit as well as credit side. Under debit side, particulars, amount, and the credit side also particulars and amount. Now what you are going to record in your debit side? That is A minus L plus. If any assets value have decreased and liability value have increased, you are going to record in the debit side. That is A minus means what? Asset value have decreased. So A minus. L plus means what? Liability value have increased. So that you will record in your debit side. Now coming to the credit side, we will record A plus L minus. So if any assets value have increased and liability value have decreased, you are going to record in the credit side. Now where do we get the information in order to prepare a revaluation account? In the adjustment. Now go through the adjustment here. Leave about the first adjustment. Now go through the second adjustment. Bad debts amounting to rupees 2000 were to be written off. Now what is bad debts? I have already told you in the previous session. If anything which is deducted from debtors, it is treated as liability. Now always we will deduct bad debts from the debtors. So anything which is deducted from debtors is liability. So bad debts is a liability. Now, in the balance sheet, there is no bad debts. They have not deducted from debtors. It means that a new liability have been created in the business, that is during the retirement of a partner. So, here the liability have increased. So, increase in liability. So, to what extent? By rupees 2000. So, where do we record increase in liability? That is in the debit side, L plus. That is increase in liability. So, write 2 bad debts. Amount is how much? 2000. Now moving on to the next one, patents were considered as valueless. So here patents earlier it was how much? 20,000. Now they are telling that now the current value of patent is 0. It has no value. So it means what? The value is 0. So decrease in the value of asset. Patent is an asset. So decrease in the value of asset. So where do we record decrease in the value of asset in the revaluation account? That is in the debit side, A minus. So 2 patents, to what extent it has decreased? So earlier it was 20,000, now it is 0. So to what extent it has decreased? It has decreased by rupees 20,000. Now moving on to the next one, value of building is reduced to rupees 1,30,000. But I have already told you earlier it was 1,50,000. Now it is now the current value of building is how much? That is 1,30,000. So to what extent it has decreased? It has decreased by rupees 20,000. So in revaluation account, we are going to take to what extent the value of assets and liability have increased or decreased. So here the value of building has been decreased by rupees 20,000. So decrease in value of asset A minus, where do we record? In the debit side. So to building account, earlier it was 1,50,000. Now the current value is 1,30,000. So 1,50,000 minus 1,30,000. So we'll get 20,000. And the next one is what? Prepaid expenses. So I have already told you it's an asset. Where in the balance sheet they have not given prepaid expenses in the asset side, but in the adjustment they are telling that there is a prepaid expense of rupees 500. It means what? Increase in asset. So where do we record increase in asset? A plus in the credit side. So by prepaid expenses, so what is prepaid expenses? 500. Next one, value of furniture is increased by rupees 60,000. So here value of furniture. Furniture is an asset. Here the value of asset have been increased. To what extent? By rupees 60,000. So where do we record increase in asset? In the credit side. So by furniture 60,000. There is no more other adjustment. So we are done with increase or decrease in the value of assets and liability. Now we will balance both the side, and the balancing figure will be either revaluation profit or revaluation loss, and it has to be transferred to partners capital account in their old profit sharing ratio. So here it has to be transferred to all the partners. Now balance both the side. Now, if you see the debit side here, so we have 2,000, 20,000 and 20,000. So, it is how much? 42,000. So, the total of debit side is 42,000. Whereas coming to the credit side, 60,000 plus 500. So, it is 60,500. So, this is the total of credit side. So, 60,500 in the credit side, whereas in debit side it is 42,000. So, 60,500 is more. Write 60,500 both the side minus 42,000. So, we'll get a balancing figure of 18,500. Now, Now what is this 18,500? Your revaluation account credit side is more than debit side. It means what? Revaluation profit. Suppose if the debit side is more than credit side, it means revaluation loss. So here credit side is more, that is 60,500. So the balancing figure. So if you minus 60,500 minus 42,000, you'll get 18,500 as revaluation profit. Now that profit has to be transferred to all the partners in their old profit sharing ratio. Now who are the partners? So how to write? To profit transfer to partners capital account. So who are the partners? Rohan, Mohan and Kiran. What is the profit? 18,500 into what is their profit sharing ratio? That is 2:2:1. They have given in the question. So distribute in that ratio. 18,500 into 2 divided by 5 will get 7,400. Next for Mohan also 18,500 into 2 divided by 5 will get 7,400. Next for Kiran 18,500 into 1 divided by 5 will get 3,700. So the total should be 18,500. So this is how you are going to prepare your revaluation account. Now come to the next account. So we have to prepare partners capital account. So write a neat heading, partners capital account. You will be having debit as well as credit side. Under debit side particulars, and you will draw column for each partner including retiring partner also. That is Rohan, Mohan and Kiran. Now Kiran is a retiring partner. So we have to draw column for him also. Next in the credit side particulars, Rohan, Mohan and Kiran. Now as usual, so we have to record each and every entry as per the admission itself. So how to record? Which is the first entry? So your first entry is for what? Recording the capital of all the partners. So how to record the capital? So here we will record it as by balance brought down. That is capital of all the partner including retiring partner also. Now where do we get this capital? That is in the balance sheet. Now go through the balance sheet here. So we have capital Rohan 70,000, Mohan 60,000 and Kiran 50,000. So record that capital as by balance brought down in your partner's capital account. So by balance brought down 70,000, 60,000 as well as 50,000. So this is your first step. Second step is that you have already prepared your revaluation account. You will be having either revaluation profit or revaluation loss. Now if you see the problem here, so it is revaluation profit. So transfer all these profit to partners capital account as by revaluation account. Suppose it is profit, you will record it as by revaluation account. Suppose it is loss, you will record to revaluation account. So here it is profit, so record by revaluation account. So you will transfer the profit of the partners. So what was the profit? 7,400, 7,400 and 3,700. So you will record all this profit. Next what you will do, as usual, you will see your balance sheet whether there is any reserve, any profit and loss account or any other fund in your balance sheet. So if you find any such type of reserve, fund as well as profit and loss account, you will transfer to all the partners in their profit sharing ratio, that is old profit sharing ratio. Now go through the balance sheet here. So in the liability side we have creditors, bills payable, reserve. So here there is a reserve. So we have to transfer this 18,400 in which ratio? That is in 2:2:1 ratio. In the same way, see the asset side whether there is profit and loss account. There is no profit and loss account. So we will have only one item, that is reserve. So transfer this reserve to all the partners in their profit sharing ratio. Now how to transfer? By reserve. That is how much? 18,400 into 2:2:1. So by reserve 18,400 into 2:2:1. So when you distribute, you'll get 7,360, 7,360 and 3,680. Now we are done with reserves. Now we are done with all the partners. Now we have to treat the goodwill as per accounting standard 26. So what is the entry as per accounting standard 26 for the treatment of goodwill when the goodwill is valued in the firm? So your entry will be remaining partners capital account data 2 retiring partners capital account. So what is the entry? Remaining partners capital account data, 2 retiring partners capital account. Now who are the remaining partners in this problem? That is Rohan. So Rohan's capital account, Mohan's capital account, Rohan's capital account data, Mohan's capital account data, 2, who is a retiring partner? That is Kiran. So 2 Kiran's capital account. So this is the entry for the treatment of goodwill as per accounting standard 26. Now how to distribute this? So let us have a working note here. Now, what is the valued goodwill they have given in the question? Now, if you see the question, in the adjustment, they have given the valued goodwill. So, valued goodwill is 60,000. Now, what you have to do, I have already told you, we have to take retiring partner share of goodwill. That is Kiran's share of goodwill. So, let us see the working note. So, valued goodwill is rupees 60,000. Kiran's share of goodwill. So, what is their profit sharing ratio? 2:2:1. This is of Rohan, Mohan and Kiran. Now, what is Kiran's share? 1/5. So, this is Kiran's share. Now, total valued goodwill is 60,000 into Kiran's share of goodwill. 1/5. So, we'll get 12,000. Now, we got 12,000 as Kiran's share. Now distribute this 12,000 among the remaining partner Rohan and Mohan in their remaining ratio, that is in gain ratio. So what is their gain ratio? 2:2. Clear? Or it can be either 1:1. If you simplify that, you'll get 1:1. So this is how you are going to distribute among the remaining partners. So this is the total retiring partner share of goodwill. You have to distribute that among the remaining partners in gain ratio. But in this question or in this problem, they have not given any information. So, old ratio. So, among the old ratio, if you take the retiring part share of profit, the remaining will be the remaining partner share of profit. That is 2:2. So, this 2:2 can be written as 2/4 and 2/4. So, if you simplify, it will be 1:1. So, you will distribute that 12,000 in that 2/4 or 2:2 ratio or 1:1 ratio. So, when you distribute, you will get 6,000 each. That is, therefore, Rohan's share of goodwill is 12,000. That is, this share into 2/4, they will get 6,000. In the same way, Mohan's share of goodwill is 12,000 into 2/4 will get 6,000. Now we have to record in partners capital account. Now who are the remaining partner? Your entry remains same. Remaining partners capital account data, 2 retiring partners capital account. So remaining partner is by Rohan's capital account, by Mohan's capital account, and write the amount in retiring partners column, that is 6,000 each. We have already calculated. In the same way, the other part of this entry will be 2 retiring partner capital account, that is 2 Kiran's capital account. You will record the amount in Rohan 6,000 and Mohan 6,000. Clear? So this is the difference of or difference from admission as well as retirement, that is in treatment of goodwill as per accounting standard 26. Now you will balance both the side and the balancing figure will be carried down only that of remaining partner, whereas retiring partner's balancing figure has to be transferred to his loan account. Suppose it is paid in cash, then you will record it as 2 cash account. Instead of loan account, you will record it as 2 cash account. But in the question, they have not given any information, so it is directly transferred to his loan account. Now, how to balance? So, if you see the column of Rohan here, so in the debit side, it is 6,000. Whereas in credit side, the total of credit side of Rohan is 84,760. Now, credit side is more, right? 84,760 both the side minus 6,000, you'll get a balancing figure of 78,760. In the same way, Mohan, in the debit side, it is 6,000. Whereas in credit side, the total of Mohan's column is 74,760. Now, 74,760 is more than the debit side. So write 74,760 both the side minus 6,000, you'll get a balancing figure of 68,760. So what it is? It is a balancing figure and you have to carry it down. Now what about the retiring partner? So retiring partner is Kiran. Now we have to balance, but the balance has to be transferred to his loan account. So how to record to Kiran's loan account? So if you see the debit side, it is 0, whereas coming to the credit side, the total of credit side is 69,380. So since credit side is more, write 69,380 both the side minus 0. So you'll get a balancing figure of 69,380. So which should not be carried down, it has to be transferred to his loan account. So before writing this carried down, so we have to record retiring partner's loan account balancing figure. So to Kiran's loan account 69,380. Now next what you'll do, so whatever the amount you have carried down, same amount has to be brought down here as by balance brought down. So that is of Rohan and Mohan. So Rohan 78,760 and Mohan 68,760. So this is how you are going to prepare partners capital account. The only difference is that you will transfer to all the partners. So if there is any reserve, profit or any other type of fund, you will transfer to all the partners. At the same time, the balancing figure will be transferred to his loan account, that is retiring partner's loan account. Other than that, everything will be same except this treatment of goodwill also. So here the goodwill treatment will also be different. Other than that, you are going to record the same entry as that of admission of a partner. Now come to the balance sheet, that is balance sheet as on retirement date, that is when did Kiran retire? On 1/4/2018. On that particular date, we have to prepare the balance sheet. Now, in order to prepare the balance sheet, so we have to refer the old balance sheet, that is before the retirement. Now, first we shall go through the assets. So, your format remains same, liabilities, amount, asset and amount. Now, go through the assets first. So, which is the first asset in the question? That is cash, 6,000. But there is no difference in cash. So, cash remains same in the new balance sheet also. That is how much? 6,000. So, cash 6,000. Now, coming to the next one. We have debtors, 12,000. But there was bad debts, right? Bad debts of rupees 2,000. So, we have to deduct that bad debts. So, 12,000 minus 2,000. So, how to record? Debtors 12,000 minus bad debts 2,000. So, the total is 10,000. That is, debtors is 10,000. And the next one is stock, 40,000. Now, see the adjustment whether there is increase or decrease in stock. There is no difference. So, it means that it remains same. So, stock will be 10,000. So, stock not 10,000, it is 40,000. So, stock, there is no increase or decrease. So, it remains same. How much? 40,000. Next, coming to the next one. So, we have building 1,50,000. But what they have told? It has been reduced to 1,30,000. To what extent it has reduced? By 20,000. So, we have to deduct that 20,000 and we have to record the current value of building. So, how to record? So, building which in the balance sheet is 1,50,000 less depreciation. So, how to calculate the depreciation? 1,50,000 minus 1,30,000. So, we'll get the depreciation 20,000. In the outer column, you have to record the current value, that is 1,30,000. And the next one is furniture, 20,000. But see whether there is any adjustment. Yes, there is a value of furniture which has been increased by rupees 60,000. So, furniture was 20,000. It has been increased by rupees 60,000. In the sense, the current value is 80,000. 20,000 plus 60,000. In the sense, the value of furniture has been appreciated. So, how to record? So, furniture 20,000, add appreciation 60,000, in the outer column 80,000. And the next item in the asset side is patents, 20,000. But there is an adjustment. They are telling that patents are considered as valueless. In the sense, the current value of patent is 0. It means what? It has been decreased. So less depreciation. To what extent it has decreased? By 20,000 itself. So that the current value will become 0. So how to record? So patents, how much? 20,000, less depreciation 20,000. So the current value is 0. Now we are done with all the assets which was there in the balance sheet. Now come to the liability side. So we have creditors, but there is no adjustment relating to creditors as well as bills payable also. It means that the value remains same, 42,000 and 7,600. So we shall record in the balance sheet. So creditors 40,000, bills payable 7,600. Next, what we have in the balance sheet, that is reserves. So we are not going to write the reserve in the balance sheet because we have already distributed among the all partners in partners capital account. Next, we have capital. But whether we are going to record this capital? No, the balancing figure of partners capital account, that is the amount which we have carried down. So that amount will be taken as capital. And we have to record retiring partners loan also. Now we shall see how we have to record. So if you see partners capital account, we have to take Kiran's loan account also. So first we shall take Kiran's loan account. How much? 69,380. Next, the balancing figure. So the amount we have carried down. So this amount has to be taken as capital of Rohan and Mohan. That is 78,760 and 68,760. So capital Rohan 78,760 and Mohan 68,760. Now we are done with all the items which was there in the balance sheet. Now we shall see the adjustment, whether we have recorded all the adjustment twice in a solution. Now go through the adjustment. Goodwill, so we have recorded. Bad debts amounting to rupees 2,000. Yes, we have recorded once in revaluation account and once in balance sheet. Patent also we have taken in revaluation account and once in balance sheet. Value of building, so here also we have taken once in revaluation account and other time in balance sheet. And the next one is prepaid expenses. So we have taken in revaluation account telling that it is increase in asset. So but in the old balance sheet, it was not there, but they have given in the adjustment. In the sense, the current asset have increased. To what extent? 500. So we have to record this in the asset side of the balance sheet as prepaid expenses. How much? 500. Next, value of furniture is increased. Of course, we have taken in revaluation account and we have added in the balance sheet. But we have not taken prepaid expenses. So now we have to take in the asset side of the balance sheet. How much? That is 500. So prepaid expenses 500. Now we are done with all the entries. So we have recorded all the assets as well as all the liabilities. Now we have to balance both the side and the total of assets should be equal to total of liabilities. So if you add all the liability, you'll get 2,66,500. In the same way, if you add all the assets, you get 2,66,500. In this sense, the total of asset is equal to total of liabilities. So in my next session, I am going to discuss one more problem on retirement of a partner. My dear students, hope you have understood the session. We had solved a very important 12 marks problem on retirement of a partner. See you all with a new problem in my next session. Till then, take care. Thank you.